Hello my friends, Josh here, and in this video I'm revealing full year results with over 550 taken trades on a triple Supertrend strategy. This is the first video of a new series where I will look into different rule-based strategies. I will not only show you how exactly to take entries and exits based on the strategy, but more importantly, reveal the backtested results in a transparent and unbiased way. After this, you can decide if you want to invest your valuable time into looking further into the strategy or not. Before we start, a quick disclaimer that I'm not a financial advisor and that this video is for educational purposes only. And without further ado, let's jump straight into our first strategy. This strategy is based on a YouTube video of Trade Pro. I will link the video in the description if you want to check it out. But I adjusted the strategy slightly and I also gave it some clear entry rules to follow, which we will cover in a second. For this strategy, we use a combination of 3 different indicators. We are using the Stochastic Rsi, the 200 EMA, and 3 Supertrend indicators. For the Stochastic Rsi, we are using the default settings at 3, 3, 14 and 14. And when you go to style, make sure to have the upper band at 80 and the lower band at 20. Then we have an exponential moving average with a 200 period. For the final part, we have 3 Supertrend indicators, for which we can use the most popular Supertrend indicator on Tradingview, which is this one right here, and then just simply plot it on your charts 3 times. If you are new to Tradingview, this is also where you can simply search for the Stochastic Rsi as well as the exponential moving average. The settings for the first Supertrend indicator is 10 and 1, and to keep the charts a bit cleaner, we will hide the buy and sell signals and go to style and turn off the uptrend and downtrend highlighter. For the second Supertrend, we have the settings of 11 and 2, and for the third, we have the settings of 12 and 3. And that's it. That's all for the indicator settings. Let's go over the rules for entry and exits, as well as apply them to a few examples. We use the Stochastic Rsi as our signal indicator. This means we get a buy signal if the blue line crosses above the orange line in the oversold area, which is below 20. And we get a sell signal if the orange line crosses above the blue line when we are in the overbought area, which is above the 80. Then we use the 200 EMA as our first filter. This means we only are allowed to take buy positions when prices above the 200 EMA and are only allowed to take sell positions when prices below the 200 EMA. The triple Supertrend indicator is used as a second filter. This means we are only allowed to take buy positions if we have at least 2 out of the 3 lines below the price, and we are only allowed to take sell positions if we have at least 2 out of 3 lines above the price. To put it all together, we will take a buy position if prices above the 200 EMA, we have 2 or 3 of the Supertrend lines below the price, and the Stochastic Rsi crosses within the oversold area. We will take a sell position if prices below the 200 EMA, we have 2 or 3 of the Supertrend lines above the price, and the Stochastic Rsi crosses within the overbought area. Let's jump into a few examples in order to go over a few of the extra rules in certain scenarios and how to place our stop loss and take profit. Let's start with the first buy example. As we can see, the Stochastic Rsi is crossing below the 20 right here. Then we would check our filters. Prices above the 200 EMA, which is great, and we currently have 2 out of 3 Supertrend lines below the price, which would make this a valid entry signal. We then enter the position either just before this candle closes or with the open of the following candle. Our stop loss will always be set at the second supertrend line below the price for the buy entries. Sometimes we have all three supertrend lines below the price. We then would still place our stop loss at the second line, and our take profit is then simply adjusted to a 1-to-2 risk to reward ratio. We will let our trade run till it hits either our take profit or stop loss. Let's get into another buy example. Here we have a bit of a different scenario. We have again our crossover below the 20 of the Stochastic Rsi right here. Price is above the 200 EMA, and we have two super trend lines below the price. This dot represents the start of a new line, which switched from red and above the price to green and below the price. We then place our stop loss at the second line below the price, and our take profit at a 1-to-2 risk to reward. I think the approach is pretty clear by now, therefore let's go over one more sell signal. Here we have the crossover above the 80 of the Stochastic Rsi. Price is below the 200 EMA, and we have two super trend lines above the price. We then enter just before the close of this candle, place our stop loss at the second line of the super trend, and our take profit is on a fixed 1-to-2 risk to reward. Going over to the two additional rules for the entry. The first one, we only enter trades with the candle of the crossover. This means if the filters cancel out the signal of the Stochastic Rsi at the candle where the crossover happened, this specific crossover is cancelled out. As you can see here, the cross happened at this candle right here. We have price above the 200 EMA, but we have all three super trend lines above the price. This means this signal is invalid. What happens after the crossover right here, where one and then two super trend lines are below the price and the filter indicates a buy opportunity, doesn't matter anymore. We only enter right with the crossover. The second additional rule for entries is that we only open one position for a currency pair at a time. If we already have a position open, all upcoming signals are cancelled and not traded. We can see it with this example, where we opened a position right here, and then another valid signal occurred while we were still in this position. This signal would not be traded. Alright, that's all the rules I have used during this backtest. Before we jump to the results, here are some of the things I have discovered. What I found out during backtesting is that the combination of the supertrend and the moving average are actually doing a pretty good job keeping us out of ranging markets, where we would have suffered quite a lot of losses. It's not able to do it all the time, but I would say it's pretty good. Then there are also the times where the Stochastic Rsi crosses just barely within the oversold or overbought area, and sometimes the cross happens directly on the 20 or 80 line. During this backtesting process, I did include such scenarios as valid signals and took the trade. If you decide to go further into this strategy, you could also filter them out. You can also change the signal indicator or change out one of the filter indicators if you think another approach or indicator will perform better. Alright then, it's time for the results. Here are the outcomes of all 575 signals the strategy produced on the 1 hour time frame in the year 2020 over all 7 major currency pairs when using a 1% risk per trade. The strategy achieved a 64% return with a maximum drawdown of almost 23%. The return is surprisingly great, and the drawdown is still reasonable for such return in my opinion. Obviously, the risk per trade can be reduced in order to decrease possible drawdowns. The strategy achieved a win rate of about 36%, which is also pretty good for a risk to reward of 1-to-2. We had the peak during the year in terms of return in August, with a return of 97%. And as you can see, the strategy struggled quite a bit during the end of the year and is currently still in a drawdown from the peak in August. The strategy also performed quite well across all currency pairs, except the dollar-yen, where it struggled quite a bit. For the dollar-yen, I've noticed that the filter indicators were actually working very well. Just the signal from the Stochastic Rsi was most of the time a bit late in order to profit from the price swings. I also do not expect the strategy to be positive for every currency pair, and the negative performance of the dollar-yen was balanced out by the great performance of all other currency pairs. All in all, I think the results are pretty good, even though we had a decline during the end of the year. What I like about the strategy is the use of the ATR through the Supertrend when placing a stop loss, which means we are taking volatility into account and are therefore quite adjustable to different market periods. Another great point is that this strategy could even be automated if desired. If you want access to the spreadsheet with all taken trades during this backtest, including screenshots of all trades, or if you want to mess around a bit with the data and check what would happen if you only take trades during specific time periods, or even apply your own money management, check the first link in the description where you can get all the data I have collected for the price of a coffee. And that's it for this video. If you enjoyed it, you would make me very happy if you give it a thumbs up and subscribe to the channel. You can also comment any rule-based strategy you would like to see backtested down below. See you next time.